Hi guys, it's Annika here with TipRanks, and today I want to talk about a stock that has 170% upside price potential according to analysts. This stock is called Cogent Biosciences and its ticker is COGT. So the current price for Cogent Biosciences is $8.40 and it currently has a price target of $22.67. This is almost 170% upside based on 3 Wall Street analyst ratings for the next 12-month price target. As you can see, most of the price targets are above 100%. Now, Cogent Biosciences is a biotechnology company that is developing real solutions to treat genetically driven diseases. They have a focus on the design of rational precision therapies, and they're leveraging validated biology to address the true underlying drivers of disease, and this is providing real hope for the patients. The company's most advanced program is CGT9486, a selective tyrosine kinase inhibitor designed to potentially inhibit the KIT D816V mutation, as well as other mutations in the KIT exon 17, and to treat systematic mastocytosis (SM) and gastrointestinal stromal tumors (GIST). GT9486 has demonstrated clinical activity and safety results in the Phase 1 and Phase 2 clinical trials in patients with GIST, supporting the accelerated timelines to proof of concept in SM. Now, although Cogent Biosciences reported losses in their financial results, they've made some progress in their clinical trials that can be fundamental in improving their next financial results, but also in achieving their objective of treating disease. Their recent corporate highlight includes the APEX study in ADV-SM patients. Cogent initiated APEX, a Phase 2 clinical study of bezuclastinib in patients with ADV-SM. APEX is an open-label, global, and multi-center study that evaluates the safety and efficacy and the pharmacokinetic and pharmacodynamic profiles of those that have bezuclastinib. Cogent expects to report the preliminary clinical data in the APEX study in the first half of 2022. There's also been a summit study of bezuclastinib in non-ADV-SM patients. They also have an FDA-granted orphan drug designation for bezuclastinib in GIST, the gastrointestinal stromal tumors. And furthermore, we have seen Cogent research team continue to evolve their efforts, so R&D expenses have also increased. As you can see, R&D expenses were $12.4 million in the second quarter of 2021 compared to $5.1 million for the second quarter of 2020. Now remember, R&D expenses can cause losses in the short term and increase expenses, but in the long term it can translate to positive price rallies for the Cogent Biosciences prices because of their ability to treat the disease that they were intending to treat. However, they have reported healthy cash balances of $218 million, and they believe this is sufficient to fund their operating expenses and their capital expenditures. The cash and cash equivalents is their main contributor to their total assets, with their total assets standing at $228 million as of June 30th, 2021. They did see a net loss of $16.5 million for the second quarter of 2021 compared to the net loss of $7.4 million for the second quarter of 2020. Now, this has mainly been due to their increase in R&D costs. As you can see, the cost for R&D in 2020 June 30th was $5.1 million, whereas in June 30th, 2021, it was $12.4 million. But Cogent Biosciences is positioning itself as an emerging leader in providing precision medicine in genetically defined diseases. They want to have a potential best-in-class KIT mutant inhibitor, and this has demonstrated promising clinical activity and safety results in Phase 1 to 2 clinical trial in patients with gastrointestinal stromal tumors. Their bezuclastinib is a highly selective and potent KIT mutant inhibitor, and this is potentially going to be the best in class. And if they become the best in class to tackle these particular diseases, then they will be able to translate into positive financial results, which will translate into positive share price increases, which will benefit investors. Driving this team, we have a very experienced leadership team that come from biotech and large pharma drug development experience, as well as deep scientific expertise in developing precision medicines for genetically defined diseases. In terms of their capitalization structure, they have 39.8 million in common stock, and they have 25.8 million in Series A preferred stock, which brings it to a total adjusted fully diluted common stock outstanding of 65.7 million. Although the SMART score for the stock is a 2, which is that it will underperform the market, analyst ratings still deem it to be a strong buy. I believe that analysts are bullish for the long term because the current R&D expenditures may benefit Cogent Biosciences in the future when their clinical trials are completed and their drug is launched officially to the market and they gain market dominance in this sector. The blogger opinions are also bullish, and hedge fund activity has actually increased by 7.4 million shares in the last quarter. This could be potentially because it is highly undervalued. TipRanks investors are also very positive, and news sentiment, although is neutral, I do believe this could be a hidden gem. As you can see, currently the price is highly undervalued at $8.4, whereas in the past, around July 2018, the share price reached up to $59.64. This could be due to their current net losses and the fact that they're spending much in R&D, which will eventually hopefully translate into the success of their trials. In fact, Cogent Sciences' background caught the attention of Jefferies analyst Eun Yang. He says that while building an internal research and discovery team for pipeline expansion for its sole asset bezuclastinib with validated MOA from competitors' approval, we view clinical risks as somewhat mitigated. With phase 2 and 3 trials set to start in 2021 for 3 different indications, SM, GIST, if it shows potential differentiation versus competitors on market and in development, we see upside potential from current levels. Now, when we look at biotechnology stocks, especially those that are heavily invested in R&D, it's important to know that R&D is something that is to yield short-term costs for long-term benefits, and that's when we see the price rallies. So if we looked at the share price that reached so high in 2018, that's because they produced good results back then, but prior to that, they spent more in R&D. Whereas right now, we're seeing increased R&D expenses, and this is a great dip to buy in at the stock, in my non-financial advisor opinion, because I believe that if their trials do go well and they do get market dominance, then we can see the share price increase with that upside prediction of 170% that we saw analysts predict. So let us know what you guys think in the comments below, and if you made it this far, don't forget to hit that like button down below and that subscribe button and that bell notification so that you can get informed on when TipRanks channel releases videos. I'll see you guys in the next video. Bye!